It was the most widely publicized surprise event we've ever seen. And that's a realization that the debt level in America has reached. I think there's a reasonable case to be made for a reasonable level of tariff. But the way they've been introduced...
Presentation's been awful.
The presentation's been horrible, and the levels that were threatened at the beginning, they weren't tariffs, they amounted to trade embargoes. It's an odd thing that you've got these very high-tech stealth bombers that nobody can track, but everybody knew they were going to do it on Twitter. So it was the most widely publicized surprise event we've ever seen. So
can we just keep going? Let's just keep going on with the play, though, if we may. Just supposing the Iranians manage to disrupt the Straits of Hormuz, just suppose they do, and they have tried before and failed. That would be quite an economic shock to get the oil price around about $130 a barrel. That does not look likely. I'm thinking at the moment. I
don't think that doesn't. Certainly, the markets don't think that's going to happen. I don't think it's going to happen myself. The OPEC did preemptively push up oil production just last month before these events. You could hypothesize that might have been a preemptive move in order to take any tightness out of the market. So I don't actually see this as going to create an oil shock at this point. We're certainly not in 1970s sort of scenario.
I think it would also irritate Saudi Arabia, Dubai, Emirates, Qatar, the rest of it. I think
China.
And importantly, China, which is their biggest customer. Yeah. So I don't think it's in their interest. To me, it looks like this may be one of those sort of flash-in-the-pan events that doesn't turn into something much bigger.
It could rumble, though, George. This is what worries me for some considerable period of time. And I don't know what you think, but always in the past, market protagonists, I mean, you're a very serious player in this. What people absolutely loathe is uncertainty. And they just don't deal with it at all well. Bad news they cope with, good news they cope with.
Yes. I mean, I would say there's a sort of short-term effect where this may be a one-off strike and it hasn't really done a lot of damage and there isn't a great deal of response. But clearly, the conflict between Israel and Iran is still very hot and escalating. And if that continues, then I guess you're going to have a much higher risk that America gets involved again. So it's definitely not off the table. I certainly haven't stopped worrying about it.
Let's talk about Trump and the on-off, and it's very difficult to decide what he's going to do next. How should investors face that kind of uncertainty? How do you face it?
I guess you're talking about the tariffs here, amongst other things. Yes. Yeah. I mean, tariffs have become a very emotive issue. I'm not one of these people that, say tariffs are entirely wrong. All taxes distort the economy. If you accept that some tax is necessary, then you can make a case that some portion of tax income should come from tariffs. And with labor costs between developing economies and developed economies being still very wide, you can say it's a way of leveling the playing field. So I think there's a reasonable case to be made for a reasonable level of tariff. But the way they've been introduced...
Presentation's been awful.
The presentation's been horrible, and the levels that were threatened at the beginning, they weren't tariffs, they amounted to trade embargoes. So that was effectively a sudden stop of trade between major countries, of course, between US and China particularly. The worst of the post-lockdown inflation shock definitely does seem to be behind us, although I still think we're in a structurally higher inflation environment. So I think there is enough reason on the table, if you like, for Powell to cut rates. And I think without the criticism being thrown at him by Trump, I think he probably would have already got the first cut in. But because he also has this need to establish or maintain independence,
and
his authority, I think he's actually forced into a position where he has to drag his feet because of the criticism. So that's damaging in the end. It's damaging for the reserve status of the reserve currency status, and just damaging for the economy altogether.
But what I really want to ask you about is AI. Because this is, for Michael and I think for all our listeners and the rest of it, terrifying as well as very exciting.
Yes, it's an amazing technology. I mean, in just a year or so, we find that AI can do all sorts of things that we didn't imagine. You know, it can manufacture movies almost, it can write poems, it can analyze text, it can do all sorts of things which we thought was a long way off. I think it is going to revolutionize the economy, but as an investment, I'm at best lukewarm at the moment. It strikes me that it is a little bit similar to the railway boom in the 1800s or the telecoms boom in the late 90s, as in it's an infrastructure investment, as in it facilitates a lot of other businesses and it's getting a huge boom in investment. But it's a cost to a lot of companies at the moment. You know, Microsoft,
Billions, isn't it?
Google, they have to invest billions to keep up with each other, Apple as well. And we haven't yet really seen the revenue streams to match those investments. And importantly, unlike a railway line, if you build a railway line, it lasts quite a long time. These chips deteriorate, so they become uncompetitive with the next generation quite quickly. So what's been capitalized as long-term investment, I think, is much closer to sort of current costs for a lot of these businesses. And I think that might come back to bite.
So in a very short way, if I could just interject for a second, Michael, NVIDIA's run a fantastic race in the last 2 or 3 years.
Yep.
That type of company may not see the explosion of growth that it has done in the last 2 or 3 years, in so many words.
Yes, I suspect the best days are behind it, and I think the real value is going to be from companies that are able to exploit this technology rather than provide the technology itself. In other words, the companies that could use the railway lines rather than the providers of the railway lines. I think it's that sort of situation.
You and Gerald came out with some interesting stats covering this, and if I may just read them out, because I think it's quite interesting. In 1975, there were 7.3 million pensions for a population of 56 million, so that is 50 years ago. In 2024, there were 12.9 million pensioners, this is in the UK, with a population of 69 million. I mean, that's an enormous growth, and that presumably is immigration. Largely or not?
That's immigration. It's also the baby boomer thing. The other thing that statistic doesn't capture is, of course, we're burning the candle from both ends. We've got more pensioners, but we're also putting people into the labour force much later because people are staying in university, higher education much longer. So they don't become earners and taxpayers as quickly. So your working life is shrinking from both ends, or your working life is shrinking from the bottom end, and your retirement life, because of rising longevity, is growing.